So Bitcoin's taking a little bit of a tumble to the downside. Don't worry. It's only getting cheaper. That means it's more accessible for people to buy. Yeah? Well, today in the live stream, we're going to be talking about something that Bitcoin needs to really get to that 100K. The further away it moves from this point, the more likely people are going to be believing that maybe Bitcoin has had its run. That doesn't mean that Bitcoin is just going to completely dismiss the idea of hitting 100K. This is an opportunity now to get Bitcoin on the cheap, given that it is at significant price levels. So what we're going to talk about today? Well, today we're going to be diving into certain concepts that are going to help us understand why the hell is the stock market continuously going up when economic factors are not backing it. So we're going to be taking some fundamentals. We're going to be looking at how Bitcoin reacts to these certain fundamentals. Now, remember, Bitcoin is a new asset. It's only just stepped into the game of Wall Street not so long ago, if you're recalling the ETF. So now we're going to be subject to specific fundamentals in Wall Street that Bitcoin might be subject to. And some of you will be like, no, Tino, Bitcoin is... It's decentralized, it's the man, it's our way to freedom. I'm cool with the ideology of what Bitcoin is about, but you're getting impressions on Bitcoin, or in other words, Bitcoin is moving because people in Wall Street are being encouraged to buy it. And with that comes Wall Street thinking. And lately, Wall Street thinking it's been a bit off. Look to the volatility index. They said it's broken. It doesn't work anymore. So that pretty much sums up exactly where we are. So what we're going to do is we're going to break down a few articles that have been hitting the marketplace just to keep you aligned with what's going on in the market. We have a very significant news announcement coming out at 3 p.m. UK time, which is 10 a.m. Eastern Standard. I strongly recommend that you wait till the news comes out, because this news is going to really show us whether or not the Fed is going to cut the interest rates as much as the market wants them to. Because right now, Waller did say that we are on the path to cutting rates, and that's what we're looking for. That probably explains why the NASDAQ made such a significant move to the upside. But with that being said, the 2-year yield was still trading higher. What does that mean? Well, it means that investors don't think that the future's looking good. So we're going to dive into all of that bad boy very, very shortly. So if you are new, welcome to the Traders Reality live stream. My name is Tino. I have a few errands to run straight after this live stream, so I'm going to try and keep this one short and sweet. I say that, and it ends up becoming 30 minutes. So let's just roll with the flavor, ladies and gents, and get with the program. Here we go. So this is what we're looking at right now. Fed officials keep options open for December rate decision. Why? Again, watching data. What data? Look, the Fed has to act on data. And as much as we hate them saying we need the data, it's the data that's going to lead the Fed to cut interest rates aggressively or not. What I'm about to go through right now is going to put things into perspective for you all to help you understand why this move to the upside, okay, from a fundamental perspective, doesn't make sense in the grand scheme of things. But when we look at it from a stock point of view, that means earnings per share. It's showing you that earnings are just doing great. Money is just being spent. The labor market is probably the fuel for why everything is still going up, because it just shows you that corporate companies, they're in favor of something. They project that the longer term is looking kind of promising until it's not. So let's get into the program and understand exactly what I'm trying to say. So these Fed speakers, they're all leaning to the idea that we need more data. The data that they're looking at mainly is the jobs data. So they've changed it again. They keep moving this. Platinum members, you know exactly what I'm talking about. JOLTS job openings last night came in at 7.49 million. That was the reading. They've now increased it to 7.51. On Sunday, the unemployment rate was at 4.2%. It's now been adjusted to 4.1%. They seem to keep adjusting these readings, and I don't know why. Maybe the market's expectations looking kind of interesting. But nonetheless, let me explain to you exactly what I'm looking at right now, which I'm going to pull up a few charts that are going to help you understand it. But just before we do all of that, China stepping up again. This is good news. So they're going to be supporting the economy in 2025. We know that China's not really doing too much because of what's going on. Don't worry about Bitcoin, of what's going on with oil. Okay. Oh, Oil has made a nice move to the upside. Happy days. So we'll just get rid of that for a split second. Oil's made a nice move to the upside, and you're going to see this with oil quite significantly. It's going to be ranging up and down, and going into tomorrow, we have, on Thursday, we have the OPEC meetings. Now, they're talking about cuts. That's usually going to bring oil's price up, but if they say they're going to be cutting oil, that gives a short-term bit of volatility. But quite frankly, the problem that we've got, whoops, we better fix that because that's going to be too loud. I can't be letting you hear that. Frankly, unless China is consuming oil, then we're not going to get any activity on oil. Oil's just going to be playing these BS side range movements. It's just not really good. There's no trend in oil because China's not consuming it. But hopefully this support for the economy is going to trigger investors to be like, okay, China's getting a stimulus. Let's start loading up on Chinese stocks, maybe. That could be the case. Euro going to parity. Unbelievable. I've said this before and I'll say it again. The euro, it's not the BRICS, right? Trump, in my opinion, isn't concerned about BRICS. That's why he's just throwing out 100% tariffs to them, right? The euro is the biggest problem for the dollar because the euro makes up 56% of the transactions on the dollar dominance. When the euro goes up, the dollar goes down. When the euro goes down, the dollar goes up. But it makes up the majority of the dominance of the dollar. It's the most liquid and the most heavily traded asset around the world. Now, with these tariffs that are coming into play, the Eurozone is going to get smacked, all right? Most of America's stuff comes from the Eurozone. So if Trump's going to put a tariff on them, it's going to be costing them a little bit more. They're going to have to pay. And the Eurozone ain't liking that, especially given that it's going to discourage the growth in the European economy. It can also increase inflation, and they've already got it down, and now they're going to have the problem of it potentially going back up again, okay? So that's something important. But listen to this. Good old boys are back with some purchases. BlackRock has just bought bought credit firm HPS in a $12 billion all-stock deal. So it says HP founders will lead a new private financing solutions unit. You see, BlackRock's already invested in cryptocurrency, and we know that's the case because they've got the iShares Bitcoin ETF. But who is this company? Check this out. HPS, right? This is the products and the solutions that they work with. In other words, what are they investing in, right? They provide asset-based financing solutions to small to medium-sized enterprises, all right, by acquiring asset portfolios and operating platforms that can originate and service those assets. Portfolios consist of leases and loans, right? Often backed by assets such as equipment, information, and computer technology. And they've just thrown a couple of aircraft, auto, trucks, and other assets. Emphasis on equipment, information, and computer technology. Maybe this company could be one of the companies that gets invested in crypto, maybe. Why are you buying this company, BlackRock? Come on, man. 12 billion. It's a bit of chump change for BlackRock, given they actually managed $12 trillion nearly. That is not looking too bad. But in the credit front, check this out. Banks hit credit card users with high rates in response to regulation that may never arrive. What a fallacy. Look at this. A regulator has turned around and said, we're going to put this regulation in place for credit cards. They're like, right, okay, we're going to have to do something about it. So they do something about it, and they've raised the interest rates on credit cards. And the regulators turned around and said, it probably might not even happen. But the banks are like, we don't care. We're still going to increase our interest rates. Do you know they changed the late charge credit fee from $32 down to $8? You know that saved US consumers $10 billion. That is absolutely wild how much money this credit card story is. Now, remember, MasterCard currently holds the monopoly for the most amount of credit out there to the sum of $1.17 trillion. Wow. When's it going to burst? Well, let me just get to the main topic of what Bitcoin needs to get to 100K. First things first. Where are we in the sense of crypto? Well, cryptocurrency right now is in a state of greed. It's all excited. Bitcoin, Bitcoin, Bitcoin to the moon. But let me explain what we need to really see Bitcoin making the move to the 100K zone. Firstly, no one really talks about this, all right? Some of the old boys in this live stream, okay, might know about the copper-gold ratio. Has anyone ever heard of Dr. Copper? No. What is copper? It's a material. What do they use copper for? Construction, material, building, movement, economic expansion. So by this chart right here, copper over the gold ratio is showing what? Showing it's going down. What's going up? This is the stock market, SPX. Standard & Poor's 500, SP 500. Copper is seen, or this ratio is actually seen as a leading indicator of how well we are doing economically. Are we looking at the same chart here? Copper is going down, right? That means there's not that much economic activity going on. Usually, when there's economic activity, right, this should be going up. Construction. Why do you care about building permits? Okay? And data that comes out in the US. Why are they so concerned about the ISM manufacturing? This going down is suggestive that the market's rising for the wrong reasons. To back that story up, in front of you is the US CB leading economic index versus financial stocks, right? When we look at this chart, we then say to ourselves, the yellow line is the S&P 500. The little line down here is Bitcoin. So when these 12 indicators that take readings from economies, all right? Specifically speaking, the US. So these 10 indicators are all pumped into this chart, whether it's positive or negative readings, right? What can you see from this? Well, you can see that when the blue bar chart is trading positive, it means that the economic indicators are justified in serving the idea that the stock market should be going up. Why? Because what does it mean? Well, it means that there's economic expansion, there's activity, there's money being spent, there's money being borrowed. People are actually in work, the economy is clocking over and it's doing a good thing. That is reflective of these blue charts, right? If we take that logic of it being positive and the stock market's going up, when it's negative, the stock market's going down. When it's positive, the stock market's going up. When it's been negative for the best part of the majority of 2023 going into 2024, even though it looks like it's going up, what the hell is the market doing? What does that tell you? Well, it tells you that the market is relying on one person. And that's the dude on my thumbnail. Specifically speaking, the Federal Reserve. This chart right here pretty much tells you that economically speaking, the market that's going up right now is not representing the economy. Something's not right. So what's making the market go up? The Fed. Why? Because the US is still the only bank, or should I say the Federal Reserve, out of all the main central banks, they are the only bank that's still got a high yield. That's why we're waiting to see what the Bank of Japan's going to do. Because if they're starting to increase their interest rates, then this chart would make sense. Why? Because economically speaking, we're not expanding by this indicator right here. Okay? Throw Bitcoin into the mix. This is not Bitcoin's price. This is Bitcoin's volume. And there could be a bit of a cultural shift right now, which is what I've been looking for. We've got Wall Street's impression in crypto. But what we now need is Wall Street to go alongside with crypto, because Wall Street is not on the same wavelength of cryptocurrency. It's not. Because they wouldn't get rid of the Bitcoin, would they? There's only one person in cryptocurrency that's in Wall Street that will never get rid of his crypto, and that's Mr. Saylor himself. So if he's banging on about it all and he's going to Microsoft pitching the idea that you should get involved in Bitcoin, if he can succeed at doing that, well, ladies and gentlemen, Bitcoin won't be an asset. It will be clearing up house. I'm telling you now. There won't be enough of it. And everyone will just go for it. Could you imagine the GameStop mania happening to Bitcoin? Could you imagine if that was the case, where hedge funds are running left, right, and center to try and get the Bitcoin? And then Coinbase and Binance and all the OTC markets that are trying to get this Bitcoin sold. And they're all trying to grab it. Or do you understand what that will do to Bitcoin's price if we get that slight endorsement from Microsoft? But this chart right here could be representing a change in cultural thinking about Bitcoin. Why? The volume here shows you, okay, that when there is times of economic uncertainty or when the economy isn't expanding as much, volume on Bitcoin goes up, okay? Then when it starts to expand, Bitcoin volume increases. Look what's going on down here. On those economic indicators, the volume of Bitcoin has been transacted on quite significantly, which could then suggest that people think that maybe Bitcoin is going to be the future currency. So they're getting in now because they're looking to fiat thinking, well, fiat's doing dog. Economically speaking, we're losing purchasing power on the US dollar. Forget what it's at right now at 6%. This thing's nearly 20% away from its purchasing power, its true purchasing power. So people have already lost faith in fiat. The fact that you can print and the fact that we got inflation, Bitcoin ain't getting no inflation. It's just one supply. So this chart right here could be a representation of the way people are thinking about fiat, which would naturally then send Bitcoin's price to the upside. So what are we waiting for? Well, we really need to see the economy showing promise and these indicators giving us the idea that the economy is doing well, which will naturally end up leading to more volume in Bitcoin, which will naturally end up leading Bitcoin to go up in price, which will naturally end up leading Bitcoin to go to 250,000 Bitcoin. And then we'll eventually get that $70 trillion market cap, courtesy of Michael Saylor. Remember, don't think mathematically that 270 trillion cannot be achieved. He's not basing it on a market cap per se, mathematically. He's basing it on the interest that can be garnered from getting involved in Bitcoin and the fact that there is a limited supply of coins. 5% of the Bitcoin supply is in the ETF, ladies and gentlemen. 5%. That's a problem. Get your Bitcoin now is what Saylor's trying to say. But he can say that because he ain't even buying it with his own money. He's using your money because he's selling you convertible bonds. What a guy. Anyway, with that being said, we got this. You remember this? Gentleman Dan Crypto Trades, mad love to you, bro. He's put out the idea that on Coinbase Premium Index is starting to show that there's a lot of interest from US investors and more than likely spot ETFs. He did say that it's slightly fading during last week, though, so good to keep an eye on. So this is relevant, because effectively the Coinbase Premium Index shows you the following. It tells you what US investors are doing. Are they buying or are they selling? And to make it even simple for everyone, what they do is they say, when it's green, you buy. When it's red, you sell. Wrong! You don't. You don't do that. The chart proves that, right? Look at it. When it's green, you buy. When it's red, you sell. Flip that. This is proof right here, because this morning we've had some interesting amount of buys. Someone bought 94,600 over the last 12 hours or so. No, yeah, yesterday. Someone bought $11 million worth of Bitcoin. Where would you see that? Well, let's just go over to that chart for a second, okay? That would probably be yesterday as this is coming down. Well, inside of this range, right? I mean, this is a day chart as well. So I'm not really looking. I can't really pull up the figure, okay? But you can see what I'm trying to say to you all is this. When it's red, it represents that retail is selling, but big money is buying because they can't sell if no one's there to buy. So the best way, in my opinion, to use the Coinbase Premium Index is to use it in the sense of where is retail at right now? Retail's buying? Okay. Is that evident with? Wait, crypto fear greed index? Yep, they're buying. We know they're buying. Smart money, dumb money. Where's that at? Where is it all done? Here we go. Smart money, dumb money. Yep, they're buying because that's the red line. That's suggestive that people in this market are very optimistic. Smart money's down here, extremes, they're selling into retail. Warren Buffett currently sat on $300 billion worth of cash, the highest it's ever been. Yeah, because Warren Buffett, he's a savvy investor. It doesn't matter, man. If he's sat in cash, it doesn't mean anything, does it? No, it doesn't. Of course it bloody does. He's waiting for something. Use the Coin Premium Index to understand the nature of who's buying and who's selling. You want to focus on it in the inverse way. When it's red, you buy. When it's green, you sell. Okay? We can back that up by looking at the Miner Position Index. Miners, where are you? What are you doing? Are you selling right now? Because Bitcoin's going down, yeah? Well, what are the miners position index doing? Here we go. Hurry up. I ain't got time for this. NASDAQ taking a shoe bag to the downside as usual. Miners, look, they're not selling. Look, they were selling at around the 90,000 mark. Okay? They sold before. They're not selling anymore. Not as much as they would have been last week. Okay? So that puts things into perspective, right, about the Coinbase Premium Index and the idea that when it's going down, they are buying. I am never bearish on Bitcoin. You're just reading the information I'm giving wrong. Or maybe I'm not clear enough. When it goes down, we want to buy. Because how many of you are complaining that Bitcoin's too expensive? Probably a lot of you. How many of you complain when it's cheap? None of you. So do that. Buy when it's down. You want it to go down. But Tino, you're too bearish, Tino. I don't like it when you're bearish. Speaking of bearishness and bullishness and madness, looking on whale alerts. Now, I've always said this, right? I've said that, people that use the blockchain data like whale alerts and what have you, well, we got to pay attention to it because there's a lot of XRP coming into this. Seeing lots of transactions happening with XRP. Speaking of which, I went onto X and I saw everyone short in XRP. Congratulations on doing so. I hope you bloody paid yourself because the stable coin Ripple is getting released soon. So that might actually be an interesting thing for XRP. And that's it, ladies and gentlemen. I'm not going to talk about XRP again until it hits $3.50. That's the next price point, guys. So with that being said, going over to Bitcoin price action, Bitcoin has taken a little bit of a tumble to the downside. Let's just break down what else is actually going on in the marketplace. Where is my data? Here we go. So options, I just want to pay attention to the options market because I've seen quite a few options favoring lower prices on QQQ and SPY. Now, the market isn't open just yet. I've got another 10 more minutes until that bad boy comes into play. But we're not really seeing that much of a significant volume coming into action on the options. If I go over to the unusual trades in the options, we got Sophie. There's a sell call there of 472,000. Not interested in that, but I'm looking at MicroStrategy. Got some buy calls on MicroStrategy. 17.3 million. So that is very interesting. Dow, there's some buy puts right there favoring lower prices. Not really seeing anything else. If I see another order on MicroStrategy, then that will be a counter. No, it's not. Okay, then. So we got some buy calls on MicroStrategy. That was significant. NVIDIA, here we go. My days. That is a huge buy call on NVIDIA. 75 million. What? Man, they want that to go up. Holy shoe bag. Let me just get that. NVIDIA gapping down at the open. Got a gap down right here. 75 million option, man. Wow. These guys are not going to let this go down. They really won't let it go down. Bitcoin. Green vector candle recovery region. Okay, let's go to the daily time frame for a split second just to understand where we are with that. No vectors at the highs. A lot of people are shorting Bitcoin, to be quite frank with you. Just quickly going over into the liquidations of longs versus shorts and the slowness of this. There we go. Happy days. So 45,000 traders have been liquidated. Where was that notification just now? Hold on a second. It's not going to come up again. Never mind. Here we go. So you can see, like, we've got lots of long liquidations coming into play. Look at all these longs that they're eating alive right now inside of this range right here. Now, what I've said to you before is to pay attention to the frequency of longs and short liquidations. So if I just zoom out for a split second, you can see that we're not really attacking any long liquidations just yet. Just make reference to this area down here. And this is a symbol liquidations chart. So what are we looking at? What we really need to see is you can see that we've got like a wave of long liquidations over here, okay? Then you've got a wave up here, right? Principle says that there should be one more because if they're going to do it in threes, psychologically, this is what you can expect to happen. When the retail trader comes to the chart, he sees Bitcoin's price moving up. He's not really favoring it. He doesn't trust it. It comes back down. He's like, I knew I was right. Then he sees it come back up again and he's like, you know what? I'm going to get involved. I'm going to wait and see if it can break this high. It breaks the high to the upside. He's now getting ready to get involved in this because he thinks that maybe there is a possibility that it's going to continue higher. It corrects from that point. He becomes a self-professed trader and he's like, you know what? I'm glad I was right on that, man, because if I bought at this breakout here, I would have been in a loss. I'm going to wait until it tries to take out the high again. So the retail trader is waiting. It then makes another move to the upside. The retail trader is convinced now by the principle of three that if he missed the entries at this point here and this point here, it means that this is his entry. So what does he do? He goes long at the breakout of the move to the upside, similar to something like this, okay? And then what happens? They then start to reverse it back down again and make everybody pay. And you can see there are structures like you might be familiar with, like head and shoulders patterns, M formations, or whatever other patterns there are out there, stopping candles, Mario, flags, whatever you want to call it. It's all psychological. It's, at the end of the day, going back to what Michael Saylor's saying about a $270 trillion market cap, it's all down to who is prepared to buy it and who's prepared to sell it. And as long as you've got that exchange happening in the space of crypto, it doesn't matter if the market cap mathematically doesn't make sense, because we got enough money out there being printed all the time to put it into it. That's the logic. That's the truth, in my opinion. Now, going into Bitcoin, it is breaking the 13 EMA, which is the 4-hour 50 EMA. So you go to the 4-hour time frame and you can see that it looks like we could be developing a little bit of a trend to the downside because it's trading below key moving averages. Going over into the Euro's not really doing anything, and I don't really expect them to do too much just yet, guys, because we do have news announcements at 3 p.m., so volatility might start to pick up very, very shortly. What are we looking for? Well, if the Fed's going to be relying on the jobs coming into place, suggesting that there is jobs being offered. I mean, if we put it into perspective over here, this is the chart you've got to pay attention to. So this chart right here is showing the S&P, which is the purple line right here, okay? Now, as that is going up, you can see that the jobs data is starting to give us a little bit of a downwards move. So if I remove absolutely everything from here, okay, to help you understand it, it's going to help you see where my brain's at with this. So as of what you can see right here, there are less jobs being offered in comparison to the high of what happened in 2000, just after 2022, the start of 2022, right? March, right? So you can see we're in a trajectory downwards move to the downside, all right? So what does that tell you? Well, it tells you and justifies the economic lack that we've got with this rally to the upside, okay? Going back into that chart, if you add the number of layoffs, you can see that's starting to increase, okay? So that would justify this chart right here, economic indicator suggesting that layoffs are starting to happen, okay? So just bear with me a second. Then we go back into it and we look at the actual non-farm hires. What's going on with that? Well, they're starting to hire. So we're starting to see a little bit of a bounce right here on this little red region, but it's not enough. But the stock market doesn't care. Why? Because it's relying on the Federal Reserve. As I said to you before in regards to this copper gold ratio chart, economically speaking, this doesn't make sense. The market's rallying and it hasn't got the economic activity or indicators backing that logic of an economic move to the upside. This gives you a signal that there could be a recession pending. I'm not giving you bad news. I'm just telling you exactly what the market is doing, in my opinion. The market's waiting for the Federal Reserve to turn around and say, that's it. We're going to make money cheap again. When money is cheap, slump to the downside. Everything gets reset. They just wipe out all of retail. And then they just bring it back up again. Just look at every single correction that we've had. We had a nice little drop here, 2020, that really bizarre infection. And then, of course, it rallied aggressively. So the correction that we get from here, in my opinion, will send the NASDAQ and the S&P to unprecedented levels. And we would then effectively be on an economic expansion like no other. So with that being said, let me have a look over here just to make sure you guys are fully aware of what we're doing. Happy days. Any questions, guys, before we kill this live? I said 30 minutes, but never mind. Tino, South Korea president calling for martial law. Bruv, wake up, Black Swan event. Yeah. Seen the price of eggs? No, we're not talking about eggs. Bit by bit. That's funny. Any other questions? Look, if anyone's declaring martial law anywhere, okay, let me just have a look at this. Anything going off on X? with regards to that. Well, no, you got to be mindful of what France are doing. They're putting tax on Bitcoin unrealized gains. That's going to be a bit of a shocking thing. Why would France do that? Italy tried it. Well, they increased it to 40, tried to do 42%, but it ended up being 23% now. But they're trying to introduce a tax right there. That is absolutely. France is saying, look, here we go. Taxing unrealized Bitcoin gains is France's way of saying we'll punish you for dreaming of freedom. Stay broken, stay obedient. What a guy. That's deep. If JOLTS comes bad, what do you expect to happen on Bitcoin? I expect, listen, you want the JOLTS to come in bad. You really do. You want the JOLTS data to say it's bad. Why? Because the Fed's not cutting the interest rates because the employment market is strong. That's why they're not cutting the rates as aggressively as we want. That's why they keep on saying that we need data. The employment market is the problem. But they seem to be ignoring economic indicators that are suggesting that we haven't been doing too well economically speaking. The stock market just says, we don't care. That's the truth. How to invest during a massive market crash. You buy the blood. Tina, when do we buy XRP? When I don't talk about it. No, that's not financial advice. No. It's common sense. I'm joking. Nah, ignore me. Ignore me. Any other questions? I'm not going to look at assets. Hold on. Yeah, European economy is done. It's done for. Tina, any idea how Trump's laws at the start of 2025 will affect everything? The first thing you need to be looking for in regards to Trump's is the actual tariffs themselves. We know he's going to be doing tariff on the European zone. So European stocks are going to get smacked on that. There's going to be a lot of automotive car industries that are going to feel the pain for that. So that could be a good opportunity for you to load up on stocks that are going to get cheap in the automotive industry in the European stock market, if you do play the European stock market, okay? On top of that, China as well. They're always going to get the tariffs anyway. But the idea is to make dollar great again. At the same time, you're getting inflation. So what I suggest you guys do is wait until the tariffs do actually come out. Once it's declared, once Trump is in office, what is he going to do with the tariffs? Because all of this move to the upside, ladies and gentlemen, could be smart money selling the rally. They could be selling into everyone. And what a perfect time to sell to people when they're convinced that it can't stop. That, ladies and gentlemen, is the perfect rug pull. It's the most legitimate rug pull. We don't need no deck screener for Wall Street. We don't need none of that. This is the most legitimate rug pull on planet Earth. And they're giving us clues that it's going to happen. Japan. They increase the interest rates. That's it. Yippee-ki-yay. Everything comes down. Make dollar great again. Yes. Tina, what's the difference between the regular RSI and the TDGIM? It's all about... I mentioned them in the previous live streams. If you've liked today's live, I've done it again. It's too long. Mad love and respect, guys. I'll be checking in with you all later on. Please pay yourselves. You've got 30 minutes until the news comes out. Just be very, very careful with how you're trading today. All right? Take care of yourselves, gang. Peace. You flipping winking.